I'm Neetha Bidway, and this is Good Revenue. Welcome. We're going to talk about autos, the economy, a little bit more on the housing market, and then we'll get into some AI updates and trade and exports. If you're new, hit the subscribe button and know that you'll always find links to all of the resources and data that we cite in our show notes. Thanks so much for joining us, and let's dive right in. It's been a tough year for the U.S. automakers. Cox Automotive forecasts an 8% drop in U.S. car sales in November. In addition, EV sales, as expected, plunged off the cliff after the expiration of the federal tax credit a couple months ago. The numbers are stark. In October, new electric vehicle sales dropped 50% month over month, and they're down 30% year over year. The EV market share has halved to 5.8%. Tesla remains the dominant electric vehicle automaker here in the United States, but their sales dropped 35%. And similarly, we've seen a decline in sales of strong competitors like Chevrolet, Ford, and Ford's struggles aren't just in the United States. They're having a very difficult time in China, which was a market that they were once extremely and maybe unrealistically optimistic about. Back in 2017, Ford was selling 1.2 million units a year. And at the end of 2025, they're expected to have sold just 115,000 units. So like many other automakers and manufacturers and global companies, they start out in China with very high hopes and optimism, and they tend to withdraw or shrink severely just a few years later. And we've talked about some of this in other episodes too. U.S. consumer sentiment appears to have fallen again to near historic lows, according to the University of Michigan's Consumer Sentiment Survey. The latest reading is 51. That is up slightly from the projected amount, which was 50.3, but it is down from October, which was 53.6. And the historic low here was back in June of 22 at 50. So this is not a great sign in terms of the trajectory of consumer sentiment. New Redfin data indicates that delisting of homes has jumped 28%. This is a record high. And what this means is that homeowners have listed homes and are choosing to pull them off the market rather than accepting a price that they believe to be too low. Redfin also notes that this is contributing to the high prices of homes that are still on the market. And in addition, this trend is most acute for homeowners who have held their home for less than 5 years. Bad news for human health and the environment continues. The FDA is about to scrap a rule that would have required manufacturers to test for asbestos in makeup products, specifically talc. Talc has been known to be contaminated by asbestos, and asbestos is a proven carcinogen. And this is very concerning, and it comes on top of other updates we've been sharing recently about changes in rulemakings from the Environmental Protection Agency, the Food and Drug Administration, and the U.S. Department of Agriculture. Circular AI financing continues to be a serious risk to investors and potentially a systemic risk to American consumers and taxpayers. Fitch Ratings has just issued a new warning about the degree of AI infrastructure CapEx spending. Fitch is noting that debt investors face significant counterparty risk due to the cross-pollination of funding, if you can call it that, in big tech and AI firms. Here are 3 specific examples that they cite. First of all, Oracle's AI compute revenues could reach nearly 50% of their total sales by FY 2029. Second, they're noting that CoreWeave generated 62% of its revenue in 2024 just from Microsoft. Their third example, Talon Energy's deal with Amazon. So in the power sector, this could drive around half of standalone gross margins by 2032. Our AI updates certainly seem to bolster Fitch's case about circular AI financing. And as we've noted before, they are not the only analyst or observer that has raised this as a concern and has made pronouncements about too big to fail AI and the nature of these circular AI financing deals. AI updates. The latest announcement that Meta is going to be buying chips from Google, not from NVIDIA, really does speak to and support Fitch Ratings' point about the circular financing and the codependency in the AI and tech market. In addition, Google is aggressively financing its TPU chip sales. And one of the examples that I found is that it's promised to cover financing for FluidStack. This is a $3.2 billion deal if FluidStack is unable to cover the leasing costs of its New York data center. So stay tuned. I'm sure we're going to see some more large purchases by tech companies, and one would assume also from other large purchasers in the enterprise as we head into 2026. China's AI strategy continues to raise eyebrows. As we reported earlier this year, China has been aggressively trying to grow its own supply of domestically produced AI chips, but it has a number of challenges. One, it's facing significant export control restrictions from the United States. And two, it doesn't have the specialization required to actually produce or fabricate chips. However, it is trying. Most recently, China has ordered domestic Chinese firms to stop buying chips from NVIDIA. But reporting indicates that two things may be happening at once. First of all, companies like ByteDance have been directed not to buy NVIDIA chips. But at the same time, new reporting in the Financial Times indicates that companies like ByteDance are also taking their models overseas, just slightly south to Southeast Asia. And they are taking these models there because they're able to access NVIDIA high-powered chips that would otherwise be banned from export to China. One of the exceptions appears to be DeepSeek. They made waves earlier this year by launching a very advanced LLM, which had excellent capabilities, but also a lot of suspicion on the part of defense analysts that NVIDIA banned chips had been smuggled in for use in training DeepSeek's model. China is also aggressively pushing forward its domestic AI GPU development market. They've had some success with AI inference chips. These are the same chips that Microsoft, Amazon, and even NVIDIA have been developing. And the strategy here is that those AI inference chips would complement the heavy-duty GPUs, or in Google's case, TPUs, that are the workhorses behind really advanced AI development. Earlier this year, the US estimated that China is producing approximately 200,000 AI chips domestically, and China has announced that it wants to 3x that production by 2026. Let's talk about export markets, starting with China's tomato paste market. I'll bet you didn't know, but a lot of tomato paste produced in the world actually comes from China. And recently, the Italians made news by announcing that they would no longer be importing vast quantities of tomato paste from China due to concerns about how that product is produced and whether or not it's a result of forced labor within China. Now, that's a huge, complicated issue unto itself. We'll obviously link to the reports that we found that support this. Now, this is really interesting, not just because of this one product, because I think it speaks to a wider challenge for China, which is as domestic consumption has slowed and as their housing market has also slowed down from some of the peaks just a few years ago, China's been heavily reliant on export markets. But due to the fact that they have flooded so many markets this year, thanks to the ongoing US-China on-again, off-again trade war, there have been resulting problems for countries all around the world. And those countries are now trying to retaliate and trying to close off their market from absorbing all of these excess goods that China is dumping. Now, in response to this behavior, as well as the last 20 years in which many developed countries have expressed significant concerns about how China has acted within the World Trade Organization, and that's a whole topic for another day. As a result of China's strength in export markets, a number of major economies are constricting access, starting with the European Union. As of November, they've intensified their anti-dumping policies and their import restrictions. Australia has also imposed bans and restrictions on Chinese goods and investments. In addition, India has banned Chinese mobile apps and restricted its imports. Japan and South Korea have also increased their scrutiny of imports from China, And they're trying to promote local alternatives, particularly in technology and in the automotive sector. And finally, the US-China relationship, which has been completely insane all year long, continues to be really, really dynamic. And as we get to the end of 2025, we are at 10% fentanyl tariffs. And in addition, the overall tariff rate has been reduced from 37.1%, but it is still at 29.3%. So almost a 30% tariff on goods from China. That has really restricted access to the US market. And that has been the undercurrent driving China to export more to other countries. Mexico has just become the top trading partner of the United States, displacing Canada after a really difficult, completely chaotic year when it comes to U.S. trade. U.S. exports to Mexico have doubled over the past 15 years, and this trading relationship far exceeds the United States' trade relationships with Asia and Europe. Two good news stories we wanted to share with you as we wrap up. New advancements in sulfur-based batteries may be really good news for electric vehicle owners. These sulfur-based batteries are potentially better for the environment, and they also provide longer battery range for electric vehicles, which has been one of the factors in the United States in terms of the lack of widespread adoption. Our second good news story comes from MIT. Researchers have developed an ultrasonic device that can actually capture water from the air and clean it, which is an incredible advancement. And you can just imagine what the potential could be all around the world, particularly in countries that lack stable access to clean, safe drinking water. And with that, that's all we have for you today. Thank you so much for joining us, and we'll see you here at the end of the week. Thanks for listening. If you liked what you heard, leave us a review, subscribe to the show, or check out another episode. We appreciate your support.